Welcome traders to yet another educational video of weekly sectoral analysis. And as usual, all of you know that I'll be starting from the Nifty futures and so on. We'll move till mid-cap index. On the left-hand side, you can see this is the weekly time frame, and on the right-hand side, I have the daily chart. So first, while starting with Nifty futures, I would like to just have a look at the monthly time frame. In the monthly time frame, we can see that the RSI is still in the overbought zone. It is at 74 almost over there. And the prices are well above the moving averages, which is a clear-cut sign that the uptrend is still intact. Yet we can say the overall trend in the monthly time frame is certainly a little bit overstretched. If we look at the weekly time frame, what has happened in last couple of weeks, the prices have bounced from this 50% retracement of this bull run from 19th of April 2021 till 18th October 2021. This entire bull run, it has been retraced, and we can see a wonderful bounce, especially the candles which have been made over here. You can see this is a hammer and this is a bullish bell toll. So this is an extremely bullish setup in the weekly time frame. We cannot deny that. But yes, the trend is still flat. It is certainly not up. We need much more than these just couple of candles to change the entire trend from down to up. If you closely look at the daily time frame, we can clearly see that the trend is still flat. It is between both of the moving averages. And what has happened that this particular resistance band, this was a previous resistance band, price has been able to close above it, especially the buying which happened on 31st December, the last year of 2021. It was a surprise for everyone, and it was able to close above the resistance of 17,321. If you are tracking my videos on YouTube, then I had clearly said that when price starts closing above 17,320, 17,350, a probable short-term rally will be established. And currently we can see that the prices have closed at more than 17,400. So I will not be surprised if in next few days, if we test 17,500 or maybe even 17,600, it looks fairly possible. But to change the entire trend, possibly we will need much more than that. I think even if we test 17,600, more or less the trend in the daily chart as well as the weekly chart, the trend will remain flat. It's not going to be up. We'll need much more than that. All right. Let's check in the Bank Nifty charts. In the Bank Nifty chart, we on the weekly time frame, what we can see, we have a decent looking hammer, and we have a good bullish bell toll candle, and this particular candle has been made at 61.80% Fibonacci retracement. Now, if I compare this particular chart with the Nifty futures chart, you can see how different it is. Nifty futures have come down only this much, and they have been able to bounce even before testing the 50% retracement. But if you compare the weekly chart of Bank Nifty futures, then the prices had gone even below further the 61.8% retracement, and from there it has been a bounce. So generally, I always say that the more a particular index, the more a particular stock retraces, the weaker it is. The lesser a stock or an index retraces, the more stronger it is. So it is very clear that Nifty futures is much more bullish, and it shows much more strength than the Bank Nifty futures. Now, is the trend up in the weekly chart? The answer is no. The trend was almost down in the last week. Now it has started turning to flat. And if you look at the daily time frame chart, we can see more or less the trend is still flat, and in fact the prices have closed just below the resistance band. You can see 35,750 or 756. This is the upper band of this particular horizontal resistance band. So if the Bank Nifty futures manage to close above this, at least for a couple of days, then might be the rally continues and we could see probably even 36,000, 36,350 in Bank Nifty futures. But yes, the trend still will not be up. It will just be flat, and it'll just be a pullback in this entire down move. Private banks. Now, if you see properly, the overall look of the chart, if you compare with Bank Nifty futures and the private banks, you will see the private bank has even underperformed the Bank Nifty. The reason for that is, now this is the PSU banking chart. PSU banks have not come down as much as the private bank. This is a surprise, but yes, this is what it is. And you can see once again a hammer. We saw in Nifty futures, we saw in Bank Nifty futures, and now this is the third index, which is the private banks. And we can see a hammer which has been made at the 78.6% Fibonacci retracement. And we can also see a bullish bell tool. But despite this two positive candles, the trend is still down. And in the weekly chart, the trend is still down. And in the daily chart, we can see the trend is trying to become flat now rather than down. And in fact, what has happened is the prices did try to close above this 18,140, this horizontal resistance band, especially the upper side of this horizontal resistance band, but prices were not able to do so. The reason for that is this entire Fibonacci retracement. If you can see, the 50% retracement is very close. So in case if the pullback wants to continue, in case if the private banks want to continue to rally higher, then first of all, I think prices will need to close above 18,250 levels. And even if that happens, my friend, this will just be a continuation of the pullback which has started in last few days. It's not going to be anything more than that. We'll need much, much, much more than this short-term buying to entirely change the current downtrend which is going on in the private banks. Let's concentrate on the PSU banks now. In PSU banks, yes, the prices have come down in terms of the weekly charts, but if you look at the, in terms of the daily charts, I'm sorry, but if you look at the weekly chart, the overall trend is, in terms of Dow theory, it's looking pretty much good. Only thing is we have come down and we have been able to bounce back just slightly due to this previous high and a little bit of candlestick cluster over here. And we have been retraced almost by 61.80% Fibonacci retracement. Now this is a decent hammer and this is a spinning top. This is not a bullish belt hold. If we had a bullish belt hold over here, then things would be a little bit more bullish. And you can see prices are struggling to cross this particular horizontal band. You can see the upper side of this horizontal band is 2576. So we will probably need a close above 2580 or 2590 for this short-term pullback to continue. Currently, the trend in the weekly time frame is flat, and the trend in the daily chart in the PSU banks is down. But as I said, we'll need a close above 2580 for a short-term pullback to happen. Metals. Now metals, I would like to first share with you what is happening in the monthly time frame. In the monthly time frame, we can see that this is a hanging man. This is also a hanging man. This is a gravestone doji. This is a bearish belt hold, and this is obviously the candle of January. But we'll not be considering this particular candle much because the upper wick of this particular candle is not very long. If this particular wick was much longer than its real body, then it would look like a inverted hammer or a shooting star, which is not the case. So if we leave this candle alone, all other candles, last 3 to 4 candles have been bearish. Still, the prices have not been able to correct, which actually it should happen, because the way the rally has happened in the steel pack, it has been enormous and it has been one-sided. If you look at the weekly time frame, what is happening is the metal pack is just wasting its time. It's just time correction rather than a price correction. Yes, I do agree that the prices have come down from this particular higher level to this level of 5370. But if you can see, the 23.6% Fibonacci retracement is acting like a very, very strong support for the bulls. Now, if you look at the daily chart, this particular Fibonacci retracement I'm sharing over here is the same thing, the same levels almost, which is the horizontal support band. But if you look at the way the prices are moving, I feel that it is completely flat. So as a trader, I would not like to concentrate on the metal pack right now. In case if someone wants to see the entire state of trend to be changed in the daily chart, then at least we'll need a close above 58.60 or something. Once this happens, then probably we can say some good short-term to medium-term uptrend has been established. But before that, I'm not much interested because prices are just moving up and down within this range. All right. Auto pack. Now, auto pack suddenly is one sector which is looking slightly bit more confident. And the reason for that thing is, let me just share with you the monthly time frame. In the monthly time frame, what has happened is we have two bearish candles over here, the previous one and the one which is previous to the previous one. But this particular candle, again, it has come up at a support of this previous candlestick cluster, which is a good sign. Plus the RSI has not been able to go in the overbought zone. So which means we still have some room left for a rally. If you look at the weekly time frame, again, we can see there has been a good candle, a good hammer basically, and a very good bullish bell tool also. If this would have come up at this particular juncture, I would be even more happy. But nevertheless, at least we have seen a decent bounce back. Now, am I trying to say that the trend is completely changed in the auto pack or something? No, I'm not trying to say that. What I'm trying to say is the candles which have been made in this particular sector and at the juncture which where they have come up is a really positive thing for an overall sector. Now, if you look as per Dow theory, we are still making lower lows and lower highs. You can see this is the first high, this is the second high. Now, as of now, we don't know because prices have not turned down, but we can take this as the third high. If you look at the lows, we have this first, second, and this third low. All the lows are lower than the previous one. So we are still in a downtrend as per Dow theory. And in the daily chart, we'll need to close at least above this previous high for the entire trend to be changing. Even in the weekly charts, if we close above that level, then I think things will change fast for this particular auto pack. And in this particular sector, I think one should need to keep watch on this particular stock, which is Maruti. I think some sort of consolidation is happening over here. If we see any sort of range breaks happening in Maruti, I think the trader should keep his eyes open to it and trade accordingly to the entire state of trend of the market. Also, just watch what other stocks are doing in the auto pack and then you can take your decision. But yes, this particular stock should be in your kitty as of now. Just to keep it as in a watch list, you can take your decisions whether to buy it or not later on when you see a range breakout. All right. Finance pack. I think this is more or less, if you see, my friends, all of the sectors are showing the similar sort of candles. I think Nifty, Bank Nifty, private banks, PSU banks, metals, autos. Now this is the financial sector, financial services sector. Again, we can see we have a hammer in the weekly time frame. Okay, so over here we have a hammer, but the place where this hammer has been made is a really good juncture because this particular hammer is accompanied with this particular candlestick cluster and the previous high, which is also happens to be near the 61.8% Fibonacci retracement. Nevertheless, the overall trend is still flat in the weekly chart and it is also flat in the daily chart. So as of now, this is just a pullback. If this pullback continues, then it's probable that we could test anywhere in between 17,600 to 18,000 levels in the financial services pack. IT. Now, this is one sector which has been able to, outperform all the other sectors in last few weeks, because when the markets were coming down, this was one of the sectors which this not did even hold on, but it also rallied. And you can see it has rallied pretty nicely. It came all the way down to this particular level of 33,981, and from here we are almost at 38,701. So currently what we can see, prices are in a strong uptrend, and we are trading around this particular Fibonacci extension, which is a resistance. Currently we are trading above that, but many times I've told you that I have seen things happening that we close above the resistance, then we close below the resistance again, and then we see a little bit of profit booking happening. I'm not saying that I'm expecting a profit booking happening, but if the profit booking comes up or something happens, and then if you see the stocks going for a short-term profit booking, then swing traders should be alert and look to buy stocks for a swing trade in the IT pack. If this trend continues, then positional traders should continue holding these stocks in as per the trailing stop losses. Pharma pack. Now, Pharma pack has been able to bounce from a very strong support band because this is the 50% retracement, and this 50% retracement has come up at a previous high, and this candle is like okay, but this particular big green candle is extremely strong, and even the trend is up in the weekly chart, and the trend is up even in the daily chart. And there is one stock which I like, which is Sun Pharma, which is already going up. This is not the price you buy. You'll be buying much lower, actually somewhere over here. But in case if any short-term trader or swing trader has missed this stock, and in case after a few days you see some type of short-term consolidation or short-term correction or profit booking, you should always look to buy this stock and look to trade on the long side with a short-term biasness. FMCG pack. FMCG pack has been able to bounce from a not so great support. I consider this support to be much stronger, but at times what happens is the prices have their own mind, as I always say. The prices have been able to bounce from this particular level. The trend is still flat in the weekly and in the daily time frame also. A simple thing I would suggest is we'll need to close at least above this previous high, because as per Dow theory, if you watch, we are making we are making lower highs and we are making lower lows. So if we want to change this entire look of this particular chart, we'll need to close at least above this previous high. Then maybe we can start seeing some positive things happening in the FMCG pack. Realty sector. Realty sector has been able to bounce from a very, I can say from a support level, which is not even a support band, it is just a support level, and it has been able to bounce back from a 38.20% Fibonacci retracement. If you saw all the other sectors except IT and metal, most of the sectors were able to bounce from 50% or 61.8% retracements, and some even from 78.6. Now this is one sector which has came down, because IT and metal didn't even came down that much, but we saw a little bit of profit booking happening in the realty pack, and after coming down, it is trying to bounce from the 38.2% Fibonacci retracement. This is a very good sign, but I will not be surprised if we see maybe few days of consolidation continuing in the realty pack, and if it does, then I think you should keep your eyes open on all your important stocks, especially DLF, because if you see, DLF has been able to close above this 391 resistance. I had shared my views on DLF on the Twitter handle also. So if the current closes, 390.45. So in an intraday, possibly even for an hour, if the stock sustains above 391 or something, then we can see a short-term rally happening in the DLF stock. All right, so keep an eye on this particular pack, on the stock, and on this entire sector also. And to entirely change the look of this particular sector, we'll need the prices to close above this particular resistance band, which is around 526, because as per Dow theory, if you check, we are still in a downtrend, making lower highs and making lower lows. Consumption. Now, consumption again is a sector which is looking very strong right now. in the weekly chart, but that does not mean that the entire state of trend has changed. This is just a mere bounce back. Yes, we can see a hammer, we can see a bullish bell toll, but this is just a mere bounce back. If you want to see the entire sector changing the way it looks right now, I think you have guessed it right. We'll need the prices to close minimum above this previous high, because this will immediately change the overall trend of the particular sector, because we'll start making higher highs and higher lows. Mid caps. Okay, so mid caps, if you see, we have been able to bounce from this 38.20% Fibonacci retracement. Seems to be very surprising. If you see somewhere over here in these 2 weeks, this was also sort of a hammer candle, and then we had a bullish bell toll, and same thing we can see over here. But this time the prices went a little bit more lower, and it was able to even test the previous high. So this particular candle is much stronger also. But again, as I said, the trend is still flat in the daily and in the weekly chart. For the entire state of trend to be changed in mid caps, we'll need a close above this recent high. So I think mostly all of the sectors, except I should say Nifty IT and Nifty Metal, most of the sectors are having similar sort of formations on the chart. I think things are very clear that yes, the weekly charts have started to looking more attractive than before. I do not deny that. But as traders, we'll be timing our trades through shorter term time frames. So we need to understand and mark our levels from where the prices will go up and where you want to actually start buying. Because until and unless we don't buy in an established trend, okay, and in an established uptrend especially, chances and probability of making money will be very, very lower. So just for a small recap, currently the trend is flat in the Nifty futures, and the pullback which has started in last few days, if this continues, then 17,500 and 17,600 could be tested. But if you want to see the entire state of trend in Nifty futures and in the entire market to be changed, we'll need much more than just this couple of 100 points rally which could happen in next few days. All right. So trade wisely and stay safe. Thank you.